All right, welcome back to Market Day Report. I am still Scott Shelly, otherwise known as the Cow Guy, and thank you very much for tuning us in. This could be the last time we're going to see each other, but it's not, right? You're going to stick around. 1 Central, 2 Eastern, that's the top of the hour. We're going to have the Cow Guy close. We've been putting up some great shows as of late. I want you to tune in, or at least stay tuned. We've got a lot to talk about. We have, again, 3 great guests. It's a Tuesday, so we got a whole new lineup, and we've got some great subjects to talk about, too. Some stuff came into our inbox that we're going to bring to your attention. So, again, that's the Cow Guy Close, 1 Central, 2 Eastern. We're going to have a lot of fun bringing these stories to you. I want to see you there, top of the hour, and that's going to be in exactly 15 minutes and 30 seconds from right now. Let's take a look at these markets, though. Let's take a look at our corn market. What do we have going on there? Let's bring that one up and see that it's going to be a little easier, about the same as it was last time we met, 7 1/4 cents lower in that D's to, It's 470 even. Now 469 3/4. We're about a penny off the lows. 7.5 cents lower. That's D's corn. March is also 7.5 cents lower to 485, a penny and a quarter off the lows there. Soybeans, they rolled over 3.5 cents lower. Jan to 13.60.5, about 4 cents off the lows of the day there. March down 5.5 cents to 13.73. So not a lot of positives here on the board. You can go to beans before they go off, but here we've got D Sweet in Chicago down 7.5 cents to 5.68 1/4, about 4 cents off the lows there, and well off the highs by about 14 cents. March down 8.5 cents to 5.94. Moving over to the hard red wheat in Kansas City, 13.5 cents lower there. Ouch, 6.32 1/4 last. I'm gonna call that about 2.5 cents off the lows there, and well off the highs by about 13 cents. 13.5 cents lower in the March, right behind it. 6.43 1/4 last there. Spring wheat, Minneapolis goes. Let's go up there and check out what's trading. Deese is lower by 4.5 cents to 7.24 1/4. 3 cents off the lows of the day, and about 11 cents off of the highs. 5.5 cents lower in that March contract to 7.40 even. And then finally, let's take a look at cotton. It hasn't really had a good day either. 127 points lower to 76.73. 6 points off the low of the day. Let's bring in Ted Seifried. He's going to try to make us feel better. He's with Zaner Ag Hedge in Chicago. Ted, what's going on? Not a lot there to feed the bulls, huh?
Yeah, not really, Scott. I mean, you kind of see this sort of developing yesterday when beans really did want to go higher, but really kind of reluctantly tried to follow, but, not really. And then when beans got up to their sort of key resistance level and sort of backed off of it earlier today, that allowed corn in particular and wheat to follow to really kind of take the lead to the downside. Now you've got corn getting very close to testing what I'd like to call contract lows in this December contract, Scott, although I can't because December contracts trade for multiple years ahead of time. So we have some lows back from September of 2021 that we have not got through yet. But lows of the last 2 years, we are flirting with touching those again. And we're doing it, well, at a time where we're getting ready for a report on Thursday that's expected to be maybe a little bit bearish. So I don't know if this is a great look for the corn market. Again, you really need the soybeans to continue to go higher in order to kind of add the strength to corn and wheat. I'm not sure we're going to get that. We hit our technical objective to the upside. Yes, we're concerned about South American weather, but it looks like it might be getting a little bit better in the future. I mean, look, it usually does. So I don't know. We'll have to see. But this isn't a good look for corn today.
Yeah, and like you said, I mean, we don't expect too much out of this November number, but I mean, is that going to be the last chance corral if anybody that's a bull wants to see him get rescued?
Yeah, I mean, absolutely. They're not going to change yield on December. So, I mean, if we get a surprise lower yield in corn and beans on this report Thursday, that would be the bullet that fixes things. But I don't know. From all reports that I'm hearing, it's a good chance we're going to see some higher yields.
Yeah, we had that hot spell in August. Everybody was worried, and it looks like the hybrids won again. What do you think?
Yeah, I got a lot of people that were pleasantly surprised was the theme. At first, it was specifically for corn, but towards the end, I was hearing a lot about the soybeans as well, or towards the end. I guess in the last couple of weeks, it's been, wow, pleasantly surprised on the soybeans as well. So I don't know. The trade does have the corn yield edging up just ever so slightly, soybeans staying the same. I don't know. For me, the big surprise would be much lower yields than what the trade are. But I think the bear surprise of higher yields is the higher potential.
Yeah, I agree. All right, stay right there. We got to go away. We're going to pay some bills. We're going to come back and talk more with Ted Seifried, Zaner Ag Hedge in Chicago after this. All right, thanks for tuning us in. Thanks for coming back. Well, when we talk about the livestock, we're going to see about what's going on. You wear this cow jacket all day. You got to bring these things up, right? Last time we're going to see them too before we close out the day. Live cattle, oof, hurts down $2.22, 179.10 last. That's 50 cents off the lows there. $3.70 lower in the Feb. Look at this, April off over $4. $4.05 just ticked up here. 180.65 is last in April. Ouch. Good serious losses across the board when we talk about live cattle. How about feeders? They too have turned lower. Look at this, folks. We got fives in front of it now. Jan's down $5.35 to 231.07. Look at that. It's already well off the lows of 230.20. So that's almost $1 off the lows. And we're down $5.30. This is hurting. March is off 5.35 to 233.75. Wow. And then finally, let's take a look at lean hogs. That was the last stalwart, and it still is higher. Can't take them lower. Geese up 50 cents to 72.90, and that's about, what, 47 cents off of the highs. All right, let's bring back in Ted Seifried, Zaner Ag Hedge. Got about 80 seconds, Ted. Boy, giving up the ghost here, aren't we, in these cattle markets?
Cattle acting like we're never going to eat beef again.
Right, right.
Not exactly sure why. You look at the livestock board, and that is a good representation of concern about the economy over time. Right? We feel like, hey, pork demand could benefit from a slower economy going into the fall and winter timeframe. Beef demand could really, really hurt considering the higher prices that we've been sitting at for quite some time. Really, that's my best explanation of what we've got going on, aside from that this is a continuation of what the trend has been, both higher hogs and lower cattle over the past few weeks. So, yeah, we're following through on that. You've got the dollar getting stronger again. You've got crude oil down, so a bit of a risk-off day. And then also kind of reflecting of what our concerns about domestic and global economy was going to look like. But I don't know. Where does the bleeding stop? Feeder cattle had sort of that level of consolidation, and we had the bounce, mid last week. But then we put on it since then, and man, doesn't feel like the bottom is in for now. Yep. We're already well off the highs. So. Oof, this could get interesting.
It's getting interesting. It's still interesting. So, yeah, appreciate all those comments. Always great content. Really appreciate you coming on. Ted Seifried, Zaner Ag Hedge in Chicago.